Welcome, everybody. Thank you for making our time to be here. For some people, it's very, very early. Some people, it's midnight. So from the regions where they're signing in from. So I want to really thank you for making out that time to be here, to invest in yourself. So one of the things we want to just, before we do our normal, I'm sure by now you can chorus all these three questions we ask. I just want to remind us again what we are doing, right? When we're trading, you need to have a process, and that process, has many moving parts to it. The first one is that you need to have a process as to how you want to enter the market. What gives you an indication that you should buy, or what gives you an indication that you should sell, right? You should have a process that does that. And in our inner circle, for those of us who are in the inner circle, well, you're welcome to join us as well. We have three processes that we use for as an indication for us to know whether we want to buy or to sell. So we have what we call the break of structures, right? That's an S, okay? Break of structures. We have the market structure shifts, MSS, market structure shifts, and then we have the rejection candle setups, right? We have those three setups that we use. And the thing is that these are just statistical, when you look at it in terms of statistics, they occur every day, right? And once they occur, it just tells you that there's a potential, there's a probability that this setup will give you the profits you're looking for. However, like I said, I think it was last week, you should go over those last week's videos. We talked about the fact that there are things you control and there are things you cannot control. And even in life itself, right, there are things you can control. If you start a business today, yes, you have the control, you have the capacity to start the business, but you do not have the control over who comes into your business, who comes to buy your products. You don't have control over that. Anybody can come as long as you make it a public enterprise, right? So you don't have control over that. Okay. And then you don't have control whether the thing is just going to boom, and like they say, really go and bring in, so much profit that you've never seen before. You don't have control over that. All you have control over is for you to start what you're doing. So also in our trading, all you have control over is one, your process, right? The other bit is the risk management. So and as well, when we talk about breakout structures, what we're looking at, so let's say we have a downtrend, right? So a downtrend is qualified as a series of lower lows and lower highs, right? A series of lower lows and lower highs, a series of lower lows. This is lower lows here, and then a lower high up there. That's the lower high, right? This is agreed. This structure is agreed worldwide. Everybody agrees. Anybody who is trading, anybody who has some trading knowledge agrees that if price starts from up here and ends up here and gives us this series of lower lows, lower highs, then that is a downtrend. And the same thing too occurs when it's the opposite direction, right? When it's going upwards. Okay, the same thing. So we said an uptrend is a series of higher highs and higher lows, higher highs and higher lows. So the bigger question now is, how do you identify when a price is making higher highs or when price is making lower lows? That is where our entry process comes into play, where we say, okay, it has done a break of structure, or it has done a market structure shift, or it has done a rejection candle somewhere, and then we want to enter. So we have in the inner circle, we have a criteria on how we do that. Okay. All right. So let's go to just to remind us. This is just a reminder, right? A reminder of what we're doing. So we ask three questions every time. What did price do before now? Or what did price do overnight? Where is price now, and what must I see price do before I execute a trade, right? And because we're trading the lower time frame, we're just going to look at what is happening today. We're not too bothered about what happened before, right? So let's look at the first thing today. This is gold, 30 minutes chart. What has happened here? It has just dropped all the way. There's no bullish candle anywhere in between. So it has just dropped a nice big drop, right? And then it's pushed back up. It's pulled back. So now, so if you remember that our higher highs, higher lows, right? So this thing has pulled back, which is good. So that means you could have entered if you're at your chart at this point here. You could have entered somewhere, right? And then now you're expecting price to come back down and break this low here where it occurred, right? But price has not done that. It's come down here, it's gone up here again, and it's come down here, right? So what is price telling you? What is price? What is the story price is telling you? It's telling you that these lows here, what happened? Okay. It's telling you that these lows here has some potential. It's resisting going further down. It's resisting going further down, right? So, but will it go down? Yes, it could go down at some point. Remember, you don't have control over everything. It can decide that, for instance, it can decide, okay, I'm just going from here now, I'm just going to drop. It can decide to do that. Or it can decide that, okay, I don't want to go further down from here. I want to just go back up. Right. So you then begin to apply your entry processes to this, whatever you're seeing there. You begin to apply those entry processes. And do not get tired. Do not say that because today you fell down, then you won't get up again. Right. In fact, okay, my Bible tells me if you fall down 7 times, how many times should you get up? 7 times you should get up. Just keep getting up, getting up, getting up, right? So let me just show us an example of what we are talking about here. So yesterday, this was on gold, right? We saw price come all the way down. Then it gave us a rejection candle, which is one of the setups we look for, right? It gave us a rejection candle right there, right? So I entered a buy, right? But I had my stop loss was somewhere here. I don't remember if I was actually stopped out or if I closed it. Anyway, whichever way, right? I closed that trade for a loss, right? Down there. Okay. And then what did it do next? You can see it gave me a bearish engulfing candle right there. Okay. So remember, this price has been coming from the top here. It's been coming from the top, right? So in fact, what it was doing here is very similar to what it did right here. Let me remove this one here. This class is turning out to be a lecture. Chai. Okay. Okay. So, all right. So look at this. It came down and gave us a kangaroo tail. Then it gave us a bearish engulfing candle, and then we enter on that next candle, and then it went further down. Then it repeats the same thing. So remember what we say as well, that price repeats itself every time. So look at what happened. It gave us a kangaroo tail, so we entered for a buy. But it stops us out. It gives us a bearish engulfing candle. We enter again, and then what does it do? It stops us out, right? So we're falling down here, and then it's giving us another one. So do you have the capacity to still say that, oh, the price is just playing with me. It's just showing me that it's not yet ready to go down. It's not ready, you're not yet ready to go up. It's just giving you opportunity. Are you ready to take that opportunity? Are you determined to take that opportunity? Once it gives you the setup, are you ready to take that setup? Right. So eventually we got in on this trade here, and then eventually it did something similar here again. Eventually it then went all the way up. Right. So the lesson for us here is that do not say because you were stopped out once or stopped out the second time, then the third one you won't take it, or the fourth one. In fact, statistics says if you Google it or do ChatGPT, for any trading system at all that you use, you can be sure that at some point you can get 5 consecutive losses, or even 6, sometimes less than, just about 10 consecutively. So back to back, back to back, back to back. Do you have the mental capacity, right, to just stay in that trade and just say, yes, it's a valid trade setup and I'm going to take it, irrespective of whether the last trade was a winner or a loser, right? So you just have to keep taking your trade setups as they come. All right. So right here now, price is just sort of going sideways on this gold here. It's just going sort of sideways. If we're looking at just breakup structures, I can see some rejection candles there as well, right? Okay, so let's look at the next one. We may not go through all the pairs, but at least let's look at what is happening. Oh, pound yen. Okay, pound yen is giving us some nice moves here. So it's giving us a nice break of structure, a pullback up there, and then it's come up here. So this one as well gives us a break of structure right there. Okay, a break of structure here, and it's pulled back down to this level. And then now, so what has it done? It's pulled back up, right? So it's giving us a nice push up there like that. Let me see. So this zone here, yeah, so it was just in this zone. This is the zone that it should have become invalidated, right? Because it was the last place it pushed up from, right? So and then it's pushed up now. So what do we expect next? I will expect some sort of pullback and then a continuation upwards, right? Oh, okay. So it will have done that. I'm sure Euro Yen too will have done something similar. Yep. So Euro Yen, what's happening to my, okay, Euro Yen too is doing something similar. In fact, this is a very nice trend. Very nice one. So break of structures, pullback, another break of structure, right, to the highs there. A nice pullback. It does not break these lows here, right? And then it's gone up, right? If you were at your chart before now, if you are ready, you'd have just seen that it's just doing the same thing, right? Market just moves up, pulls back, moves up, pulls back, moves up. It's just doing that. Or that is all it's doing. And we're just positioning ourselves and just taking those trades as they occur, right? So do not be afraid to take a trade and do not be afraid to allow it, hit your stop loss. Don't be afraid. That's where risk management comes in, right? Okay, but if you're in the inner circle, we'll have talk more about risk management. All right, this is pound Aussie. Okay, pound Aussie. What pound Aussie doing? Pound Aussie, it just looks like it's coming down and down and down. So it's gone up, come down. It's gone down again. So what is it doing? It's trending downwards, right? So what do you expect? A pullback and then possibility that it will come back down, pull back up, and then possibility it might actually come down to these levels here. Okay, right. So let's see what's the next one. This is Euro USD. Oh wow, Euro USD is trying to decide. So the yens must be really in some good moves here since Euro USD is going down. All right, okay. So you can see it is pushing down. So what do you expect? A pullback and then a continuation downwards. Very nice and simple. Pound USD. Where is it? Okay, pound USD initially started like this, came back down, came back up. So pound USD is just kind of just sideways, right? And then you need to decide, do I want to see a pullback and then continue downwards, or do I want to put a line in the sand, right? Just put a line in the sand and say, okay, I want to see a break below here and close below, then I'll then enter for a sell. Or if I see a rejection candle there, down there, then I'll see if I can enter for a buy, right? Very good. Let's look at the last one. USD yen. Oh, yes. So that is it. Okay. So USD yen pushing up. So the dollar must be very strong right now. So it's pushing up. There must be some sort of news. I think there's some news. That's why this is just one big candle. So what do we expect? At the close, we expect some sort of pullback and then for it to continue. As long as it does not break below this low, because from these highs, if you look backwards, where's the last opposite candle that caused this push up? Is right here, right? So we're expecting price pullback and continue up. If it comes all the way back down and closes below, then it's no longer a valid setup for us, right? Beautiful. Do we have any questions? Let me check the chat if there's any question. Okay, no questions. Very good. All right, so we'll see at in a few hours for New York session. If you're able to join us, you're welcome to join us. We'll see back then. I'll upload this as soon as it's ready. Thank you very much. Oh, okay. Billionaire Joseph, please go ahead.
Sorry, I was looking for where to raise my hand. Good morning,
Good
Lina
morning.
J.
Yes,
Okay, just a quick clarity.
yeah.
For the gold,
Okay.
you see that when the market dropped, it wigged downwards, And so where you put your stop loss is supposed to be at the week, not at the close. Is that correct? If you're looking at where you uh,
Okay, so if
this
right,
one you
so
draw, so you see the week from the this one that dropped down.
okay, is it on the, are you saying if we put our stop loss down here?
Our stop loss could it be at the close of the body of that first drop, that long drop?
And no, so which direction are you going? Are you going for a buy or
Okay,
a
for
sell?
if you're going for a buy and you want to put your stop loss, do you advise that we put our stop loss just below the wick or below the body, the close of the body for this long, this first one, this first,
This long one
yeah, this
here.
long, yeah, down.
And
So
so if
the
you,
suggestion is
yeah. So in
if you are
this,
doing a buy, if you are
no,
going for
you
a
won't be
buy
doing a
from the
buy. You'll
down.
be doing a sell if
No,
you are following
from the
this
down, from the down, from the down,
from
yes.
this low here. Ah,
No,
no.
as soon as this one closed, as soon as this one closed,
As
at
soon
the
as this
close
one
of, yes,
close. Yes, okay.
yes, we have an engulfing candle. The third one is an engulfing candle.
This one.
Yes. So
Okay.
yeah, so if this is an engulfing candle, if you want to do a
A
continuous
buy.
buy
Okay.
from there, your
Yeah.
stop loss should be below the close of this long one or below the wick.
Okay, so okay, a straight answer will be, so let's look at the formation. So when we have an engulfing candle, let's say price is coming down, coming down, coming down, and then you have an engulfing candle, right? Technically speaking, where you put the stop loss is below that swing, right? So typically we expect that price is coming down, then you get your engulfing candle. Okay, and then if you're going up, you then want to have your engulfing candle at the very top. Okay, now, so when we say when it's at the very top or when it's at the very bottom, where you put your stop loss is below that swing where that candle emerged from, where the signal candle came from. That's where you put your stop loss. So in this
Okay.
scenario here, right? In this scenario here, I want to hesitate a bit, right? Um, because we are not looking to okay, how do I put it now? We're not looking to catch the bottoms, right, or the tops. Okay, so what we do, typically speaking, I will filter out this one. I will say that this one will not qualify as a proper, this one won't qualify for me as a valid engulfing candle, right? Why is that? Because you can see this big move. So what we'll be expecting is that price will pull back and then come back down. That is what we'll be expecting. Okay. So it's okay to say that, okay, you want to look for a move somewhere down there and then you want to go up. But you need to be able to also filter out trades. So for instance, look at what happened here. So you can see some sort of support here, right? You can see lots of rejection. It came down here, it was rejected, it went up. Came down here, it was rejected, it went up. Came down here, rejected, went up. Came down here again, rejected, went up. By the time you see this engulfing candle here, then you are fairly confident, right, that this can actually hold because you've had multiple rejections down there. Okay. Now this one, by the time you enter put an entry somewhere here, where would your stop loss be? Ideally, it would be from where that swing started from. So the swing is down here. So what will happen? The thing that will happen now is that let's look at how many pips is that. So from here, let's even say you're able to catch it somewhere there. This is like 480 something pips. So would your account allow you to have 480 something pips as a stop loss? Right? Or do you want to say, okay, I'll just put a tight one. And when you put a tight one, you know the other alternative is that you are likely to get stopped out. Okay. So ideally, the stop loss should be at the lows of the swing where that signal occurred. Okay, to be at the lows. But if you then put it tightly, then you are likely to get stopped out. So this is where you now have to filter in. You have to filter which trade is more, which trade has a higher probability, right, of working out. So for instance, let's look at this now. In fact, that was a very good question. So let's look at this. So you can see price came all the way down and then closed above here, gave you a bullish candle here, right? Went all the way up, came back down here to this same zone here, right? You can see a lot of rejections, rejections, right? And then look at, it's giving you a nice kangaroo tail there. It's giving us a rejection candle there. It's giving us a bullish engulfing candle. It's giving us this. So that all this story that is telling us here is telling us that there's a likelihood that price could actually move up. And where will it be going to? It'll be coming back to these highs here, potentially to come back to that high, right? So you have to just follow the story of the as the candles are printing, just follow the story of what it's telling us. Okay, so to answer the question, so I hope that answers the questions. Ideally, once you get your signal, you put it at the low or at the high, the swing low or the swing high of where that signal occurred. It's now left to you in your risk management to now say, am I willing to risk 400 pips for all we know, even if you entered right here, for all we know, and put your stop loss here, price can just do all this pullback and then go all the way to 6,000 points, right? It can do all that. We do not know, I'm sure I've said it a number of times. We do not know what market is going to do. All we do is just follow our process every time. Just follow our process every time. And I'll just be a bit hesitant to actually be too confident in the buys here. Why? Because USD JPY is actually very strong right now. And typically speaking, when you look at correlations, if USD JPY is going up, then other instruments like gold should be going down. So, you just do correlations. If you look at it, you will see what we're talking about. So look at this big move down here now. Let's see what USD yen did overnight. USD yen was just going up gently as gold was coming down overnight. This one was just going up. So you see them, even this other man, USD CAD, that one should be going down, but he's doing a lot of fighting here too. Right. So sometimes correlation won't show you very clearly, but by and large, right, it will if one of them is going up, the other one should go down, typically speaking. Anyway, I hope that helps us. Thank you so very much.
Yes, thank you a million. I do appreciate this.
Thank
Thanks.
you, sir. Thank you, sir. You're welcome, sir. All right. So we'll see you at 2 o'clock West African time.